We're all talking about how capital market plays have done phenomenally well, right? This is the prime example of how well capital markets have done. The largest online broking company, Zerodha, announced FY24 earnings. CEO Nithin Kamath has said, and I quote, they're bracing for a big revenue hit, end of quote, amid upcoming regulatory changes. The folks who run it are broadly cautious. I mean, Nithin, for example, regularly warns his Twitter audience that things are not going to be as great as they have been, but 24 has been fantastic. Vamakshi is here with details. Vamakshi.
Well, absolutely. FY24 was a fantastic year for Zerodha. They witnessed an uptick of almost 21% in their revenues, but the net profits were up nearly 62%. But going forward, the management appears quite cautious on their growth outlook as well as their growth trajectory going forward. Nithin Kamath, who's Zerodha CEO and co-founder, said that despite the strong performance that you saw in the past year, the company might be seeing a hit in its financials due to various regulatory changes from this year onwards. Many risks were around the corner, he said, and they all seem to be materializing simultaneously, and they're already seeing revenue and profit plateauing, and they're bracing for a big revenue hit in the coming year. They've also gone ahead and quantified the impact from various regulatory risks. SEBI's True to Label circular, which will come into effect from October 1st, they're expecting a 10% revenue dip on account of this. SEBI's consultation paper on index derivatives, if it does materialize, could see an impact of almost 30 to 50% on its revenue. Additionally, increase in STT is expected to come through from 1st of October, and the impact on options trading is expected to be minimal, but it is expected to be quite significant on the futures trading. The threshold for collecting annual maintenance charges has been raised to 10 lakh rupees as compared to 4 lakh rupees now, and additionally the removal of opening account fee could also lead to a meaningful drop in the revenue, is what the company has highlighted. Along with that, the referral program is now only limited to authorized personnel, so therefore customer onboarding through the referral program, that will come to a halt if you're not an authorized personnel, and resultantly this could impact growth going forward. So this does have a negative read-through for not only Zerodha but for some other brokerages as well, which includes Angel One and 5 Paisa Capital. But nevertheless, the company is also undertaking several diversification measures in order to mitigate these regulatory risks. But given those factors, we do have Zerodha in focus, and along with it, Angel One and 5 Paisa Capital also down in trade.
Thanks a lot for that, Vamakshi. By the way, take a look at the markets.
Thanks for tuning in to CNBC TV 18, and for more news and updates, follow us on all the social media platforms.